Okay, here we go. Hello, everybody. Today is April 26th, and this is our new session. And I'm saying new because this is the first time I personally present with Ron, and we talk about HGSI software features. It's going to be a little bit informal. Ron and I, we've been talking this last week, and we kind of feel that we want to have a lot of interaction, a lot of conversation, and that's going to be very familiar to all of my students who attend my classes. You guys know how I like to, talk the concept through. We have, I think, an outstanding session today. And that's going to be hopefully the first session in a series of sessions that we can create together with HGSI and Ron. The history of this session kind of came about with the release of the VPA features by HGSI. And I was really interested in those features, wanted to have a look because obviously those features are Wyckoff-based features. In our advanced Wyckoff course, we discuss VPA. We actually go through the exercises. We talk about supply and demand signatures and the relationship with the price. We kind of set our goals with Ron to have this session, and I apologize, it took me actually a little bit more time to get my material together. So today, finally, we're presenting that session. And as we were preparing, I thought that why not show other features as well. So today we're going to talk about VPA, but not only that, we'll talk about the top 50 list, and Ron will show us how to create it and how to create the weekly scan. And we'll look into the scan results of that top 50 list, and from the Wyckoff perspective, structural perspective, we're going to look at what kind of scan results we're going to have with that scan. Then we'll talk a little bit about the intraday industry group scan, and that was a question in the classroom for the last week or two. So quite a few people, especially in the January cycle, were asking about that. How can we select specific stocks for the intraday trading based on the market breadth or based on the industry group outperformance, underperformance. Ron will show you how to create those, and I'll show you, what can we do with that intraday scan. And then we'll conclude our session with the VPA case study on Amazon. We'll go through the weekly VPA, and then we'll go to the daily, and we'll just go through all of the signals in a specific structure, and we'll talk about, kind of like what's the narrative there for all of those signals, how can we contextually interpret those signals based on the Wyckoff structural price analysis. Ron, before we go forward, first of all, thank you so much for doing this with me. I had a lot of fun even just like talking to you and preparing and just looking at the features. Can you tell us, and specifically to my students who might not even be familiar with HGSI, what is your role at HGSI, and what do you do on a daily basis?
Okay, well, first of all, thank you for having me, Roman. Yes, it's been enjoyable talking about this and seeing how we can work together with the software and the Wyckoff methodology. What I do is I've been involved with HGSI for 15 years. It's a lot of people do not know that the software has been around that long, but it's been developed over those years, and it's totally different, of course, than where it was 15 years ago. I have a partner who his name is Ian Woodward. He may be retiring or be more on a limited basis because he has had to move to Austin, Texas near his son. But anyway, my role is to educate people about HGSI, and not only educate, to come up with new techniques to get the most out of the software. Now, I started working with VPA using Amy Broker, and Matthew, who is our programmer, and George, who is the software developer, saw what I was doing, but it was a clumsy process working with metastock files and so on. So Matthew decided it would be a nice thing to put it into HGSI, and that's how this evolved. And not only did the VPA signals get put into HGSI, we are also working with some other volume-related signals, such as float turnover, which is kind of related, but more importantly, volume at price and volume point of control. And I'll talk a little bit about that today, because those are a couple of, especially the volume point of control is a very powerful technique.
Mm-hmm.
So to sum it up, I'm an educator, and I find ways to get the most out of the software, and then I share it with the community.
Great, great, awesome. So the first thing that I want to ask you to show us is a top 50 list. So the way how it came about, and again, you know, a lot of the questions that I'm going to have is just the questions from the students that I have.
Okay.
So students have asked me to put a weekly list of the stocks that, you know, I'm looking at. And when I started compiling it, I realized that, you know, majority of people actually being drawn to the lists that are already in existence. So for instance, IBD 50 list or HGSI top 50 list. So why? Well, because a lot of the popular momentum stocks are going to be on those lists. You know, obviously any approaches to IBD, you know, are going to have some kind of, you know, as we've discussed, some kind of legal ramifications. So we don't want to go that route. So I really got interested in the top 50 from HGSI. So I understand that you can create the top 50 list based on the daily, and then you could combine that data together and put it into your weekly list. So could you talk about that, how you would do this, and maybe show as a process how it's being done, and then I can go through that list and see what kind of candidates we would extract from those scans.
Sure. I'd love to do that and explain the concept behind it.
Mm-hmm.
It's something I came up with a couple of years ago. But before we do that, I want to point out that our web address is highgrowthstock.com. And if you do not use the product, you can get a free 30-day trial. You don't have to give us your credit card number or anything else. You just download the software and get involved. I have to warn you, it is an extremely powerful program, and with power sometimes, well, comes complexity. So my goal with this software going forward is to, like we discussed, Ramon, to break it down into modules like a Wyckoff module and so on, just to limit the number of views, filters, and combos specifically pertinent to this methodology. So that's where we want to go. Anyway, here it is. A lot of you are familiar with Gil Morales. He is a big supporter of HGSI. He has access to Market Smith and Wanda, which is a $25,000 a year program. But guess what? He uses HGSI as his primary prospecting tool. Okay, now let me get this out of the way, and that's enough promotion for right now. But the program is made up of different modules. We have what's called the designer, which you see right behind me, right behind this menu. I mean, this is the designer, then a charting module. Ranking module, we were originally going to talk about that today, but we're going to pass on that today because I don't think we have time. And then the warehouse view, which you will see. Now, to get that top 50 list, we have what are called smart groups by a variety of people. All of these smart groups I and my partner have put together over the years, and they all perform a certain function. There are other people in here who have put smart groups together. And a few years ago, I was looking for, probably about a year and a half ago, I was looking for a way to get a quick list of candidates for prospecting. I didn't want to go through the entire top-down process all the time because it's very time-consuming. So why not just come up with a quick list of stocks and then take the analysis from there, because I knew that there would be some decent candidates in that list. So I was doing it all manually, and then George and Matt, the programmer and the developer, came up with a very efficient way for me to do this, for us to do it. Most of our subscribers actually do this top 50 every day. And what I'm going to do, and by the way, I am recording this on my end too so I could use my drawing tools. And this little icon over here allows me to initiate the process. And I'm going to clear this, but before I clear it, I want to point out a few things. This is the report, and we have these options. We can apply a filter to this list of stocks as we generate it. We can require a minimum number of groups for these stocks to be in, and then we can make a group from the report. And every day I make that list. Each morning it just goes to the same folder, and then I just put the information in. So this is the way it works. I'm going to load a selection. Now this is a list of various scans that I have in here. I rarely use any of the others. I do a lot of experimenting, of course, but this is a standard. It's called the Top 50 GIR with Groups, or Group Inclusion Report. Now when I open this, it selects all of the industry groups. And why do I want that? Because I want to see what groups are appearing near the top of the list. And in addition to that, it goes in and selects these smart groups. Now the smart groups are, what the smart groups are lists of stocks that have been generated with filters and what we call a combo ranking to bring the top quality stocks to the top of the list. And you can see that I have selected multiple smart groups here. Leaders, stocks with earnings acceleration, there's a mixture of both fundamental and technical groups here. These are stocks and groups moving to the upside. These are strong earnings per share stocks near the 52-week high, and so on. So once I have selected that list, I select Make Group from List, and I've already done this today, so I'll just put sample in here so I know which one it is. And this is going to be using the data from Friday because I did not run a full intraday update today. Had I done that 15 minutes ago, I would be using current data, but I don't want to take the time to do that right now. So I'm going to click on that, and this window appears. I just overwrite my last HTML page, and I'll replace it. And what this does, I don't need to generate the list. I can if I want to. HGSI generates indexes of all stocks that are in a group, and this would be the index of these 50 stocks. Now, based upon this top 50 as of Friday, you can see that the industry group is up here. All of the smart groups that this stock appears in, USCR, on Friday, there are 11 of them are listed over here. So I can immediately see which of the stocks, or which of the groups, stocks in the groups, let me start over, the stocks and the groups, where they're appearing and how many times they appear. So as I go down this list, you can see the numbers become fewer on the groups, and then I arbitrarily chose the number 50 because I thought that was enough stocks, and I can keep track, or I have consistency that way going back in time. Now I'm going to go back into what I call my non-index groups, and here's my top 50 GIR. I do this every morning, so I have a history here, and here is the sample that I just created. These are the 50 stocks. Let's just take a look at that index that I created, and you can see that these stocks currently, this is a very strong index. So this is an equal dollar weighted index of these stocks, and it looks good. Now what I do is I go into, and I'll go back to the GIR to show you the weekly, but I just want to show you this one right here. I use a view in here which automatically sorts these according to their industry groups. So you can see which groups are dominating or were dominating on Friday. There were several application software, several biotech, which I don't think did well today, a couple of specialty pharma, and the cement and aggregates. So here's that U.S. concrete right here. There's also a lot of information here about whether there's a VPA signal today. There is not one today, but this column right here is the days since the last VPA signal, and that VPA signal was 4 days ago. 0 is always the day it was generated, and that was a high volume down bar. So this tells me that this stock must have turned around after that VPA signal. Then there's some other information. I'm not going to get into all that right now. But let's go in and make the weekly version of this. To make the weekly version, I go through this same process. I'll just clear this out this time rather than using the smart groups though. All I do is I go back down into these user groups that I showed you, and I will select the previous 5 days on a Saturday. So let's just go back. Well, here's my weekend group that I already combined it. And what I did, and occasionally I will run other groups with those filters that I mentioned, like this was the top 50 stocks on the move. I applied a filter to get that. But this may be a little bit confusing, but I just do the prior consecutive days. So 18, 19, 20, 21, and 22 I'm just selecting those, and I'll make a list from this. Sample weekly, I'm doing the 50, so I am creating the group on Saturday out of these stocks that appeared most often. And you can see last week that LGND and TSE both appeared 5 times in these top 50 groups. AmSurge 4 times, and so on down the list. So that is how I get the weekly list to look at on Friday. I have both a Friday list to look at and a weekend list. And then I just go through and start looking at charts and analyzing them. Once again, I will go back in here and I will go on the sample weekly, and evidently we couldn't come up with 50 stocks. Okay, unless I've got a filter on. No, I do not have a filter on. So anyway, I got a short list here, but that's the way I cut it down. These are the ones that appear most often.
Okay. Well, for us, Wyckoff Traders, we definitely would like to have this type of scan on the weekly basis, because what happens at the end of the week, you want to sit down and just start doing your analysis. You want to go through the leadership or potential leadership. You want to put the stocks on your watch list. So once you generate this list, the next step for us, to do is just to go and to look at those stocks and to understand what kind of structure they're in. Also we need to understand when we generate this list. One of the questions from last week in one of the classes that we've had was, you know, what is it that we're generating right now? You know, after this prolonged rally that we've had, this upswing, if you are going to do any type of relative strength scans, what do you think, what kind of results you're going to have? Most likely, those stocks that you're going to pull out are going to be already in the extended uptrend. They're not going to be in the trading range necessarily, or maybe they will be in the trading range, but that means that there was a weakness throughout the whole upswing. So I have asked Ron to generate a couple of lists for me, weekly lists, and one of the lists that I've asked to generate is from February 19th, 2016. Ron, I'm going to switch to my screen right now.
Sure.
So just to give you a perspective of you know, where the list has been generated, it's this day right here. So contextually, and we always have to think about the context of where we're generating that scan. So we're seeing a smaller trading range right here. We're seeing also the retest of the previous trading range right here. And this is the day when we're creating this scan. So let's look at the scan results for the top 50. Yeah, and I'm not necessarily showing the whole list, but I want to show you the stocks that are going to be in that list. So again, the results that we've generated, they were based on February 19th, 2016. So, and this is where we want to be very active with our, you know, filters and scans, because we're in the oversold condition relative to a larger structure. We are also in a smaller structure with the price attempting to break through the resistance. So this is a really good timing for us to initiate the scan like that. So you're always going to have with any type of scans, and I haven't seen the scan that is going to be, you know, precise, you know, in the selection. You're always going to have different structures that's going to be presented to you in the results. So, and sometimes you're not going to find any Wyckoffian structure that we would desire. So a stock like this that is just going up and down, and at the point of when we're conducting the scan, there's really nothing interesting to us here. We might be thinking here maybe a short term in a sense of this is a consolidation, maybe a redistribution consolidation because of the downtrend that has been established before after this failure right here. Excuse me. And what we can expect is some kind of continuation of this downtrend. So you're looking for any of the signals, you know, that's going to continue to the downside. But a stock like this will not attract our attention whatsoever from that scan. The second type of stocks that you're going to encounter are going to be stocks that you're going to find within the structure, within the trading range. So those are extremely interesting to us because Wyckoff spend a lot of time looking through the trading ranges, identifying when trading ranges start, when they end, as they go through the price fluctuation in that consolidation. He was interested to understand in what kind of phase or what kind of period of the trading range we are in currently. He also was interested in the directional bias of where the price will go after the trading range is resolved. And also he was interested in timing, when exactly the price is ready to go out of the trading range. So from this perspective, this scan result here for this particular stock is actually quite good because we are at the support level, we are retesting the previous lows right here, and we are creating two structural scenarios here. We could be possibly in phase C, which is the last phase of the testing process, or we could still be in phase B, which is still would suggest more consolidation. Now, the beauty of trading tactics using the Wyckoff method is that for both of these scenarios, we are expecting with the high probability that the price is going to go up at this point. So whether it's phase C or phase B low, we're still expecting a retest of the resistance, and at this point right here we can decide what we're going to do with the position. So, and I actually quite like this trade because it allows a swing trader to be in the stock that is showing relative strength, that is showing a great position within the industry group, and you can enjoy a very sustainable upswing right here. And then from the perspective of the long-term trader who uses Wyckoff method, in this area right here, you can make some kind of trading decision as to whether you're going to scale out, you're going to exit the position, or you're going to hold the position based on how the price behaves above the resistance and how the first reaction, a possible backing up action, is behaving as well. So this type of candidates we definitely would be attracted to, especially after the leadership like this. We want to see, what kind of rally sustainability we're going to have out of this new range. Another example of the scan results that we could have, and this is something that we would definitely be extremely interested in, is a stock that is comparatively close to the original range. So if we're looking at this trading range right here, and we understand the structure of the range, we understand all of the phases, the testing process that has happened, and then we understand that we are committing to the upside, and we're the scan results is bringing to us the stock, and we could speculate that we're experiencing already a sign of strength and some kind of backing up action. We can say that we're relatively early in the trend formation, and after this reaction, the price is going to accelerate. It's going to have more of ease of movement to the upside. We could have some kind of reactions in stepping stone areas, but we definitely have established a trend. So from that perspective, this type of candidates would be very, very attractive to us because those are high probability places, structural places where we can initiate the position for the continuation of the trend. Another example, and we've discussed this stock in the classroom, Edwards, and the regional trading range had a very, very substantial sign of strength rally right here in phase D, and this is where we're creating another range, which is a smaller range, which is a stepping stone range, and it acts as a backing up action to the sign of strength. And even by the structure, by the price structure, how the price is creating higher lows and higher highs, we already see that structurally we have a strong stock. And then going into the first months of the year where the market was going down, we see that the stock, the price of the stock is reacting, but there is nothing really substantial. There is nothing that could be compared to the market. And here we are, this is where we are getting this scan result for this stock. Once we go through the structure and we understand that there is a very big original causality here that was created during this period, and then we have a confirming stepping stone with the strength where the price is breaking out already after testing action at the backing up action. We could actually take even a breakout trade here after the backing up action, and that would be a good point of entry for us. And look what we're already doing in the weeks that have followed. So this is how we would use the top 50 approach, and I probably, Ron, would use mostly weekly rather than the daily, unless I'm much more shorter oriented. swing trader where my positions probably last from like 2 days to a couple of weeks, then I'm extremely interested in the daily top 50.
Well, the advantage of the daily would be that you are closer to the market as to what's happening right now. But I think the weekly would just work just fine.
Mm-hmm.
Either way.
And one of the things, that we've discussed in our classes, we definitely want to approach, even from the swing trading perspective, all of our selections from the longer time frame. So you want to look at the structure, long-term structure first to understand what's the predominant long-term trend. Are we consolidating or are we in the trend already? Because your interest, your signals could be interpreted differently depending on the context of the time frame, right? So, and Ron, absolutely right. We would be much more closer to what market is doing when we're looking on the daily. And again, if you're trading with on a smaller time frame, and even on the intraday, that daily top 50 is actually a good list to start your selection, for your trades. Okay, sounds great. So we've covered that. And by the way, guys, if you feel that you have a question, just write it down in the questions box, and I'm gonna kind of like sort those through. And I think that, Ron, you've answered one of the questions from Scott here. How's the weekly scan generated differently from the daily? You showed how you combine those 5 days and just generate the new report for the weekly. And then I understand that they are being sorted by the number of times they've been mentioned throughout the whole week.
Now, another thing we can do with that top 50 or any other scan is, like I mentioned earlier, we can apply filters. And I haven't done a lot of experimenting with this, but we could put some trend requirements in or outperformance versus the S&P 500 and so on, and use that as a filter to, limit the results.
Right. And then the stocks like this, which might still outperform on the short-term basis, it could outperform the market just on the short-term basis. But some of the structures that were underperforming, let's say, are probably not going to show up after you do more filtering there. So that would be awesome, yeah. And maybe this is something that you and I could work on, just to create that top 50, maybe like Wyckoff list or something like that.
Well, I do have a filter. It's in the archive somewhere where a stock has to outperform the S&P 500 over 2 weeks, 4 weeks, 3 months, and so on. And that something like that may do the trick. We'll work on that.
Okay, and this is a related question from Perry. How would you sort through the weekly GIF symbols to identify those that are still within trading ranges? Would you look at them manually or via a scan? So for me personally, I'm not a technology guy, so I would, if let's say I'm generating a list like this, and it seems wrong, like, we can work on some additional filters there, even to maybe filter out the stocks that are close to consolidation areas, maybe where the price has spent at least like 6 months, 12 months without making new lows and new highs, something like that type of filter. But Perry, I actually do this manually, so if I'm using one of those lists, I would just go through all of them. And with the structure, you really quickly visually can do this. You can identify the trend, or you can identify a consolidation, and then within a consolidation, right away, visually, you'll be thinking about where exactly I am in the trading range. Am I at the end of the trading range? Is the price ready to go away, or am I still in the testing process? Ron, could you add anything to that?
Well, I don't think you can beat looking at the charts to get a feel for what's going on. And with only 50 stocks, and especially looking at the stocks that are appearing, multiple stocks appearing in the same group, it takes very little time. to
Yeah, I
flip through
agree
the
with you.
charts.
I totally agree. And actually, it kind of works for me really well, but I've been doing this for almost 20 years now. I remember the times when I had like, 3,500 stocks and I would manually go through them, on the weekend. So that was very laborious, but, 50 stocks is really nothing. Um, okay. An unrelated question, from Kim. Will this be posted as a recording? Yes, we are recording this session, and both Ron and I will post it on our websites and on YouTube, I believe.
Yes.
Um, okay.
Okay, where would you like to go next? Do you want to go
Yes.
to the intraday?
Yes, so let's talk about the intraday. And the reason why I wanted to bring this up, and when I was talking to Ron, I asked him this question, and it actually came from a student. So the question was, how could we use some kind of market breadth tools to identify which stock or stocks or industry groups specifically to select for our intraday trading? And I thought that was a very interesting question because usually I'm all about simplicity. And whenever people ask me this question about the intraday trading, how to select stocks, the easiest way, especially for beginners, is just to identify those popular momentum stocks and just familiarize yourself with their intraday behavior and just trade those. And trade those based on the comparative strength analysis. You're comparing those among each other. You're comparing those to the indices, S&P, or let's say NASDAQ composite. And that's probably the easiest way because you don't have to do anything else. Your mind is not going to be distracted, and you will be concentrating more on the process of trading rather than on the selection. Now, there is a way to complicate this and yet try to find kind of like the best candidates that are going to have trending days. Because with the predetermined selection, not every day you're going to have a trending day. And that kind of sucks for our trading because we really would like to be in a stock that is moving, that has a momentum behind it. So therefore, if we're talking about momentum, we should be talking about rotation of money into that stock. And usually when the stock is being marked up, we want to see a confirmation of what I call a thematical buy or thematical sell program for that day by institutions or strong professional hands. So the question that I was asking Ron is how do we actually scan using HGSI for industry groups on the intraday basis that maybe within the first, 5, 10, 15, 30 minutes are going to identify the rotation of big institutions into that particular group. So Ron, I'm going to switch to you.
Okay.
Okay, go ahead.
Okay, I just updated the intraday quotes while you were talking, Roman. So this is actually the end of day data now, but let's just pretend that it is during the day. And what I do is I go into my intraday. I have a folder called Intraday, and down here I have created a folder called Wolfpack's Intraday. Now you probably wonder what a Wolfpack is. Well, years ago I guess I coined the term stocks are like wolves, they run in packs, and generally that pretty much holds true. Now in Roman's charts there was a dotted blue line. That is the industry group, and the industry groups are a big part of what we do with HGSI because you want to be in strong stocks and strong industries because they have a tendency to support one another. So what I have here, if you look up at the top, you'll see that these are stocks just trading for $1 and above 100,000 shares, very minimal requirements, and there are nearly 3,100 stocks in here. Now I want to know what's happening during the day. So I bring up what we call the spectrum analyzer. And this particular view right here, I load a custom slice, and if you download the program, you'll have this available. And number 4 right here, the intraday percent price change up and down, I get an immediate read on what's happening at that point in time with these 3,100 stocks. 73.88% of them were up, and only 26.12% were down. So I know that it's a strong day in the market, even though the indexes were not really reflecting that. Now the real power of this comes in when I should have left it open, but I just scroll up here to the industry groups and I select this pie chart, and what this does is it tells me the number of stocks that are in the groups. It doesn't give me any relevant information though. To get that relevant information, I'm going to make indexes out of these stocks. So I'll click on this folder and I'll date this 2016-0425. I'll call it intraday groups. And when I click on OK, it's going to think about it for a few seconds. It's doing some calculations on my computer, and then you'll see that it starts indexing these stocks into their groups. So it's going in and pulling out this information. Essentially what I'm doing is I am building an advanced decline list. And I will go to this group down under my user groups that I just created. These are the intraday groups, and now I select the number 4 view, and I'm sorted on raw combo. What this does is it gives me the indexes created from those stocks, and if you look over here to the right, you'll see the advancers divided by the decliners. The strength today, based upon advancing issues versus declining issues, or breadth, was in the exploration and production stocks at number 1, 54-0. The next one is auto parts, and that was 28-1. Here's the number, and then here's the breakdown, followed by specialty apparel and semiconductor manufacturers and so on down the list. Here are the semiconductor devices. If I look across here, if I click on 14, it shows me that this was also a very strong group. Now this is a group that has really kind of stagnated the past 5 or 6 weeks, and it is showing strength today. Now that's great. Now I want to know which of these stocks are the ones that are most in demand on an intraday basis. So all I do is I change to the index group, and here are the intraday prices, but I'm going to change what I call, or what we call, a combo rank. And the combo rank takes any field in HGSI, and I'll just open this up so you can see it. It allows us to weight any of the fields according to percentages. So I'm looking for stocks that had a strong intraday volume compared to their 50-day moving average, an intraday price change, a large price change, force indexes. Force index is an elder indicator. It's today's close minus yesterday's close times today's volume. It's a price and volume indicator, otherwise I wouldn't be using it. There's a 2 and a 13, and then a white candle, and so on down the list. I have put some fundamental fields in here, but it's primarily technical. So I sort on that, and the top stock, the one that's most in demand based upon all of those criteria, is one called Pioneer Natural Resources Company. It was up 7.73 today, and if I look across here, you can see the EPS rank is terrible. It's 2 out of 99, but that's why if you're looking for rotation in the market, you pay no attention to the EPS ranks. The CanSlim people, that's the first thing they look at, and they never see stocks like this. So here is a stock which generated an effort to rise today. Here was a test for supply or no supply. Here was an effort to rise. And then here was one down day. Volume was kind of muted. And then today it took off. Now I bring the fundamentals up, and the next earnings due date is 8/2, so that means the earnings are already out, must have just come out on this stock. But this is the stock that's most in demand. Here's the one that's second in demand. Now we're getting some conflicting signals here on VPA. This is an effort to rise. This is telling you that it may be an upthrust, or especially with this huge volume bar. A lot of times the big money sells into extremely heavy volume, takes their profits. You can see that it happened one day here. It looked like it maybe was going to turn around, but it kept on going. But that's the way you can do this with any of these groups. I can look for advances versus decliners, or now that I'm using this new combo, I can just see the groups that are most in demand based upon that combo. And that would be cement and aggregates. So I bring this up. Look at this beautiful chart here. Now this is an equal dollar weighted group. If I go to the index group, there is that USCR again. This has been one of the most beautiful stocks. It's had a few shaky days, and the reason is I believe that the 50-day moving average volume is well, around 370. So it's not a heavily traded stock, but it has been in a very nice uptrend for quite some time, and this has appeared multiple times in the group inclusion report top 50.
Mm-hmm.
Now, you have a question?
Ron, no, go ahead, finish your thought.
Okay, I just wanted to point out that let me introduce something to you right now. This is just a naked chart, obviously, with the VPA signals. Now, something that I'm working on now, this is brand new, nobody else has this beta, is something called volume at price, or volume point of control. And this green area down here tells me when this stock, based upon a 10-day volume point of control, when the bulls take control of a stock and when the bears are in control of a stock. There are some choppy days here, but when the price goes over this 10-period line, it tells me that the bulls have gained control of this. Now, I'm not going to get into all the intricacies of this. This is something brand new in HGSI, and this is what makes HGSI so flexible and powerful, is that we add new indicators all the time, and this is something that is not available in any other software program. Anyway, we can come back to this. Go ahead, Ramon.
Mm-hmm. Okay, so let me come back to the intraday scan, where we started. So once you generate that scan, and obviously, again, I want to reiterate the purpose of why we would do this. Why would the intraday trader be interested in this information? If you are trading stocks on the intraday basis, you want to be in the momentum, you want to be in the industry group and pick the stocks from that group where the money is rotating to. So, and you can have different trading strategies there for your intraday trades. One of the most common, and this is just the list that Ron has generated for me, on the intraday basis today, and one of the industry groups that was showing a lot of rotation was electronics components. So I went to this industry group and I started looking at all of the stocks. I went through all of them, looked at the structure and so on and so forth. So what you want to do is you want to put the industry group into the perspective of the structure of where we are. Are we in the trend? Are we in the consolidation? In this case, as I look through the industry group, I see that Again, we had the retest of the lows, so very similar to the market action, and then we are in somewhat of the uptrend, and the short-term picture is we are in the trading range. Now, the way how this particular group behaved today in the morning, it had a gap, and then it tried to commit above the resistance that was created by the stop-in action before we went into the change of character here to create the trading range. So what kind of contextual interpretation can we derive from this? If we're basically looking at two scenarios, either it's going to commit or it's going to fail. In both of those contextual interpretations, we can actually have trades both to the upside and to the downside, and we're basically trading the volatility that is being caught by the intraday scan. So let's look at the stock and just see what the intraday action was today for this stock. So a big gap and the first mean reversion trade by strong professional hands. Increase of ease, how the price moves to the downside to cover the gap. Increase in supply. We always want to have some kind of testing action after the increase of the supply, and we want to have it on the higher low and on the decrease in supply. Or if we're going to have an increase of supply like we have here relative to the previous supply, we want to see what kind of price action we're going to have. In this case, we see that supply is increasing, meaning that effort is increasing, and yet the result relative to the previous move to the downside is much, much lower. So we are trying to push the price down, but the price does not want to go down, so that actually shows short-term bullish sign. And we can expect some kind of move to the upside. Any type of reversal mechanism that you're using to identify your point of entry would be sufficient here, and any type of reversal mechanism for the exit purposes would be sufficient as well. And you actually have two nice trades here after identifying the industry group where there is a lot of activity, where there is a lot of momentum, and you basically want to be in those stocks on the intraday basis because of that type of movement. Ron has mentioned this stock, PXD, Pioneer, right? And we also see that look how much movement we have for for this stock. So you could easily trade all of these swings, and this stock was actually in the uptrend on the daily, so your intraday bias is going to be up as well. So you're going to be taking all of the signals that are going to occur on the upside, something like this. So all of the trades to the upside are going to be very nice trades today for the intraday. And even at the close after the 11th hour on the Pacific, yeah, you could have another trade right here. So we really need to understand the context from the perspective of the structure. We also want to understand the context from the perspective of the market breadth. And with the intraday trading stocks, it might be a little bit more challenging, but here is an actual practical tool that you can use. Ron, did you say that you have a delayed 15 minutes?
Yeah, it's 15-minute delayed.
Mm-hmm.
It's not real time.
I see. Okay. For me, that's probably not a big deal because all of my intraday signals, are coming after around 7 o'clock Pacific, and that's just because of how I've created my intraday system. I want to go away from the initial 30 minutes volatility, and then once the trend is being established or has been established, I want to get in on the trend on some kind of counter to trend reaction. Okay, sounds good. So now let's conclude, and we're probably going to go beyond 1 hour time, so we'll probably stay for another 10-15 minutes, and then hopefully we'll go through some questions. So I see, guys, that you are posting some questions. Please be patient, let us finish the presentation, and then we'll go to questions. So let's talk about the volume and price analysis. And I thought that probably the best way to do that, Ron, is just to go to the software and kind of like see what kind of signals we are going to have there. And I picked Amazon because of the popularity of the stock, because of the recent up move that we've had. I actually pulled out one of the slides from the class just to show the structural interpretation before this move to the upside. But what we would be looking at, the weekly bars that were and signal on the VPA that were created in this area, in this trading range. And what I would like you guys to think about, especially those of you who know Wyckoff methodology and you know phase analysis, think about which phase we are in and what kind of signals we're going to get at the support and the resistance. And then based on that, what kind of trades we can generate there using the VPA. So let's go to the chart. Okay, and here's this trading range, and this is already on daily, so it's going to look a little bit different, but basically it's just, basically the same chart. And I want to start with this bar right here. So Ron, please correct me as I go along with all of the signals. I'm going to read this sign right here, effort to fall, bearish sign. And I think that it's just a very good identification of the first initial weakness that's coming and the first initial supply that's coming after the up movement. And what this bar is in Wyckoff interpretation is a change of character bar. So something different is happening with how the price reacts. And if we would look at the whole move to the upside, and change of character usually is going to show us that we are at the beginning of some kind of consolidation, some kind of weakness. If we're looking at this bar right here, where else would we see that type of bar? Again, the comparative analysis that Wyckoff method has, I think, is one of the best, because you have to understand what you're comparing, how you're comparing apples to apples, oranges to oranges. So when I look at this bar, I also could see that, and I don't know why this was not necessarily identified here, this bar right here, this bar right here, and then this bar right here. So all of these bars, except for this one, and I'm just going to put a circle here and maybe like yellow color, they show that change of character from the previous upswing. And these bars are showing us that at the minimum, after this change of character bar, we're going to have some kind of consolidation. And after this consolidation, then we would be looking for the change of character bar, and I'll show you a change of character bar only for this trading range, of where we're getting out of the trading range. So Ron, this is something, one of the thoughts that I had for us, even to work on, just to identify that, change of character bar and change of character. So the first reaction right here, and then we see that the next signals, if we're going to look in this area right here, this is just a continuation of the test of this supply that originally came in. And we see that supply is still present, and it's still relatively high relative to anything that we've seen in the up move. So therefore, we are expecting that there's going to be a retest of these two areas and the lows that were created by the downswing right here. Now, very interesting signals in between. So we are looking at these two up bars, and it shows us that the strength seen returning after the downtrend, and then the next one, because of the previous bar, an up bar closing near high following a buy condition confirms the return of the strength.
Roman, you may want to also look at that second line with volume. The
Okay.
one just, it tells you the volume less than average and the
Mm-hmm.
spread of the candle above average, close is very high. All of those are factored in to these flags.
Mm-hmm.
Now, I've started referring to these more as flags or an alert rather than, just calling all of them signals, because certain conditions have to be met for these VPA signals to be generated.
Mm-hmm.
And those two lines together give us
Yeah,
a pretty good explanation.
and one of the things I want to caution, all of my students, and we're going to discuss this maybe even tomorrow in our market outlook class. You have to understand where those signals occur, in the structure. If we are talking about a change of character right here in this area, what do you expect to happen structurally after that? You are not expecting really a continuation to the upside. There might be a retest of the previous highs as an attempt, to commit to the upside. But you should be thinking that right here we might be creating a trading range, and there is a possibility that the secondary test action is going to fail. And therefore, when you look at the up move, you're not expecting the up move to be the same as the previous up move. It's going to be less. The target that you're going to have is all going to be about the resistance. And in this case, you would be looking at the signals and you would understand that this is just a temporary rally. And we probably having just a short-term reversal near support, and we just have to see a continuation to the downside. And it's so much weaker than we would expect it to be. It cannot even touch the resistance. So on the reversal, we could potentially open a short-term position to the downside just to retest the lows here, or even with an idea that there might be a continuation and a lower low.
That doji there also indicates that it was failing.
Mm-hmm. Okay, so as we go through all of the other signals here, some of the signals that I thought were, again, extremely interesting. So for instance, we had this bar right here that showed us initial weakness. We have this bar right here that is showing a continuation of that weakness. We look at the volume. The volume provides us a confirmation that supply is still available and that we are still in the testing process. And then this bar right here that says an upthrust bar, a sign of weakness. Okay, upthrust.
Okay, it means it opened and it traded higher, but it failed.
I see, so relative to the previous one. Okay.
Right.
See, I'm looking contextually more as to, let's say, do we have any some kind of, trading range right here, or maybe this resistance and we are upthrusting, but now I understand. Okay, great. So these bars right here, they are somewhat similar because contextually they define what kind of supply we have still present, when the price is being pushed to the downside. And we see that there is still some supply left. So at this point, just because of that presence of the supply on these bars, I would probably identify this bar also as a sign of weakness here, bar, based on the context here. Well, it is defined like this, so I'm sorry. We would expect some more retests. What are we retesting? We're retesting the lows always. So this low here and this low here. So this is the support cluster where we would be expecting the price to come and do the retest. We do have this bar right here. I'm slightly curious, how else could we identify this bar, because there is a contraction of the spread. And this signature, it has both increase of the supply and increase of the demand. Supply is still dominant over demand, but yet we're stopping here. And then this bar is very, very much telling, because I would be comparing this bar to this bar to this bar and then to this bar, because all of them are coming off the highs of the recent highs, and they're basically showing us a measure of supply that is still present in this stock at this moment of time. And we see how supply has been staying high, and then it just starts to contract. And on the further retest right here, where we have other signals that are already showing us that, like a signal right here, strength is returning, and this is a relatively bigger bar than anything that we've seen before. So this is our first smaller change of character bar on the upside. So we are expecting something different to happen with the price after this point. We're expecting something different to happen after this contraction of the supply, how this bar starts to behave differently. And then remember I was talking about the first change of character bar on the way into the trading range? Well, we have this bar right here that is the largest up bar, and we could actually argue that both of them are change of characters bars. But they're telling us that behavior of the price action has changed. This bar and this action right here is showing us that supply has contracted, and that demand is becoming to be present, and therefore this is a change of behavior. Now, I've showed you the phase analysis, and we put phases like this, I believe, where this was phase C, and from Wyckoff method we know that phase C and phase D, this is exactly where we want to become extremely active with our trading tactics. We want to identify our points of entries. We want to understand where we're going to place our stop loss and how we're going to move it. So it's in this area right here where we're going to become extremely active with our positions. And then as we go up, we're really looking basically for a change of character again. And Ron has mentioned a couple of bars like this where we have what HGSI calls a transfer of ownership right here. So I think that it's a good definition. In this case, it's a good definition for the shorter time frame because we have a stop in action. So this acts as the climactic action, this acts as the climactic action, this acts as a climactic action. But all of them are smaller climactic actions relative to their trading ranges, like this one, like this one, like this one right here. So we do not have a terminal climactic action, more like this one, where we have a much more pronounced change of character. So we would be looking for, again, a bar like this. And again, I'm really happy to see that we have this bar here with the description that gives us effort to fall bearish sign, because this bar acts as a change of character for the whole move. And we could also observe the change of character, based on the break of the trend, how supply is increasing as well relative to anything that we've seen in the uptrend. So this is just a really, really good identification right here.
And you could see how it was stalling before that too, with a couple of signals over there. And on that line that you're looking at the description, the volume, if you'll put your crosshair back on that one, the volume is high, spreads wide, closed down, sentiment's bearish.
Again, you can use the signals by themselves, but I still think that you would have to create some kind of a systematic approach, how you interpret those and how you take them into your trades. My biggest emphasis in this segment of the presentation is when you take the signals, think about the context of where the signals occur and what they actually mean. So it's a very great visual tool to quickly identify extreme bars with some kind of either extreme volume or price signature or extreme divergence between the effort and the result. And those are usually going to be the bars where you are going to have that change of behavior. Those are the bars that are going to be mostly occurring on the change of the trend close to the resistance to the support. And those are extremely important places for us, Wyckoff and traders, to think about of what we are actually doing there. So that is kind of like the message from me today about that. Ron, would you like to add something about this?
Well, no, I totally agree with you. You need to put it in context, and in context of the group and the market too.
Mm-hmm.
One thing here, where you are right there on that bar, notice how the group had started to show a couple of lower highs and lower lows. So the group was in trouble too.
Mm-hmm. Yeah.
I always look at the group.
Okay. Great. I think that's it. Let's see what kind of questions we have here.
Okay, fine.
Okay. And guys, please feel free to write anything that you want to ask us about. A question from Kim. This Amazon analysis very exciting. Can you show daily chart with HGSI flags to optimize point of entry and exit for swing trading? Okay, Kim, yeah, absolutely. So let's say that, I mean, obviously for the swing trader, we're not just going to look at the weekly. We would be looking at the daily and sometimes even intraday, for our points of entry. So let's imagine that we are maybe somewhere here. We are assuming that phase C has been done. We're having a sign of strength here and then a backing up trading range right here. So we want to look into this range and see what kind of signals to the upside we're going to have that's going to help us find a point of entry.
Roman, just for your knowledge, if you hit the alternate D key, it takes you to daily. Alternate W takes you to weekly.
I see. Okay. Sounds good. Thank you, Ron. Okay, so here we see that a smaller change of character is going to come right here in this area. So again, you just want to put everything into the context of what is happening. So A, B, possible C. You might interpret it a little bit differently than me. You might start your interpretation somewhere here. But let's just look at the signals. We basically want to find the signal that comes in phases C, D, or early E. So where is that signal? Well, I see it right here. So after the last test of the lows in B and A, we're looking for the reversal after the reaction into phase C, and we have this reverse up thrust, indicates strength, effort to rise, bullish sign. So if you're entering here and you're thinking that this whole area right here is a big backing up action after the sign of strength, you're expecting the price to continue its move to the upside. And this is a perfect entry right here, and the stop loss could be just below the supply point that was created by the previous bar. And here we go. And this is definitely some kind of event, probably earnings there. The fact that, the price jumped so much, and then we are expecting a mean reversion trade at this point by strong professional hands. So at this point, you have a decision to make. Either you're just closing the position, scaling out, or you're just holding, depending on your time frame. If you're a swing trader, I would probably advise, just based on the volume characteristic here, if we are not having this type of reaction next day, most likely you just want to close that position. So you can also establish some of the stop losses even on the intraday basis. Look at the intraday points of the supports and the resistance and just place the stop loss based on that. But this would be a confirmation in the day where you would say, yeah, I'm going to close the position. And then you would go through the same notions again. So first reaction in that trading range, right here, change of character. So here is your range that is being defined by the climactic action, automatic reaction, secondary test, phase A, tests in B, phase C. Once you identify C, you want to find that signal on the BPE. Where is that signal? I believe this is the one right here. So effort to rise, bullish sign. You're buying here, you're identifying the last point of last indication of the supply, which is probably in this area right here, and off you go. And we are kind of going to be in the same situation here on the exit where the price actually gaps, opens up really high. So based on the previous actions, you can just start scaling out or just closing as the price goes down intraday. So that's how you would use those signals after you have interpreted the context of the trading range, after you put your phase analysis and your Wyckoff events. Kim, was that what you were asking for? Let me know. From VJ, phase D when support was tested for 4 days and automatic rally is around in the next 5 days. Do you still take it for a markup or wait for your event to be over? Vijay, which earnings reports? Okay, which range we are talking about? So we're probably talking about here. Yeah. This is a very common question. I think we're talking about this event right here. So if we have entered a position here and we anticipate that earnings report, do we still hold on to this position? Okay, so I've done some research for institutions on this issue where we were, when I was asked if there is a Wyckoff-based signal and we took that and we expecting our earnings, and I think that this is an earnings here. Should we close a position before, or should we actually hold through the earnings report? And in the majority of cases, if Wyckoff signal was a correct Wyckoff signal, most likely you should be holding this position through earnings, because the logic here is like this. If this signal was given and then we see even the price advancing, think about big institutions, what they are doing. Obviously, they have more information than us, retail traders, so they are anticipating that the earnings are going to be favorable and that and they would start accumulating the stock even in this area right here and on the way up. So therefore, the signal itself shows you the possible commitment of big institutions before the earnings. So you want to interpret the technical data with the narrative of what big institutions are doing and how they are expecting the earnings to be. Now, that's not always going to be the case, and in some instances, which are going to be, happen fewer times than not, but they still will happen because we are playing probabilities here. In some instances, it's not going to be favorable, and you might have gap, to the downside. But that's going to be a very kind of like low probability event if Wyckoff signals are interpreted correctly. Okay. Great. Let me see what other questions we have. How about a mock-up of our earnings for market context? Yeah, that's a very interesting question. One of my students actually in this current cycle, he was bringing this up, and we wanted to look at the major trends and to put all of the earnings reports and just to see where fundamental data is kind of like catching up with the technical data, especially after the creation of the trend. And usually the technical data is going to indicate to us that the trend is intact already, or it's been established much earlier than the fundamental data. So I'm not against trading on fundamentals, I just don't do that. But a lot of my institutional clients actually do that, and they use fundamental filter as the first filter. A lot of my retail clients actually do this, and obviously, you know, any can slimmers, you know, would do that, and so on and so forth. So there is nothing really wrong about using the fundamentals. And you just have to remember that technicals most likely gonna be more advanced in the trend creation. Anyone who was holding Apple through earnings today is probably not too happy now, are they? I actually did not look at the earnings report. We started this session. So, Ron, do you have any thoughts on that?
197.1 estimate, 190 actual. They missed, and it's trading at 95.91 right now.
Mm-hmm.
From
Okay.
a close of 104.
Well, then again, you know, to my previous point about technicals, you know, maybe kind of like superseding fundamentals. We see here that there was a swing trade. For a swing trader, you most likely would be out regardless of the report, you know, whether it would be a favorable or unfavorable. Based on what? Well, you have a break of the trend and a change of character right here in this area. And again, I'm just happy that HGSI is kind of picking up this sign right here. This was a change of character relative maybe to a smaller swing to the upside. But these two bars for any of the swing traders would get you out of this position. And regardless of what kind of earnings you might have here, you know, whether it's going to be a gap up or gap down, you just want to wait out with your swing trades and just basically find another consolidation like this and find the timing tool to identify when to get into the position. You know, from this perspective, you probably wouldn't be even in this position today.
Roman, notice that on the positive bullish candles after that, the volume down at the bottom was not substantial at all, and there was not a signal after this first change of character bar. Mm-hmm. If you'll go back, so it didn't generate a flag anyway.
Yeah, yeah. So, and it could be very telling, you know, just based on that. Can the indices themselves be traded based on Wyckoff events in VPA, like spiders or Qs? Could we put, let's say, spiders here?
Sure.
Okay, so here we go. And
price and volume.
Yeah, so contextually, we definitely can apply Wyckoff structure, you know, to any trading range or to any trend interpretation. So I'm just looking at the signals here. So I like this signal right here, and even this one, this two, that are telling us that strength is returning. One of the things that especially in the Wyckoff practicum class, we go through this. I always tell that the change occurs not overnight. You know, it kind of takes time. Big institutions are big fish in the market. They can't really move that fast with the size that they have. So if they're going to start accumulating, they're going to start accumulating through the week, through the months, maybe through several months, maybe even throughout the whole year, where they would be just very intelligently and consciously buying at the specific price levels. So I like all of these signals that are saying that we are somewhere close to the stop in action, and especially this bar. Actually, in our classes we interpreted this as a climactic action, stop in action,
Right.
just based on the previous support area and how this bar reacted with the attempt to go down on the increased supply, and yet it reversed and closed more positively. And then you would be expecting that there's going to be some kind of move from this lows once the price reaches it again in the retest. And here we go. Here is this retest, and we're seeing how supply has contracted relative to this area right here, and almost instantly the price comes back. So if you are swing trader and you're thinking about this target, which I was, this is a really good trade right here. And then this bar, and again, just ironic, it's so ironic, even yesterday we were discussing these two bars right here. It shows a change of character after attempt to reverse the price and push the price down. So it shows us a confirmation that there is strength and that there is going to be a continuation and effort to rise bullish sign. So that's exactly how you would use VJ, in your trading of the, let's say, of the spiders. Now, again, the idea here is that you really have to put the signal into the context of where it occurs. So look at this bar right here, and then look at this bar. They look the same, right? Big spread, the same signal. We have less volume here, more volume on the first one, but you have to think where it occurs, right? So if this was a climactic action, then, and this was automatic rally secondary test, phase A, we know that we're in phase B. What kind of phase B price action could we expect here? Most likely, we're going to have upthrust actions in phase B, and we're going to have some kind of tests. So here is your upthrust action, and if you look at this bar, you know that this could be just a trap where big institutions are pushing the price up. It creates an excitement. Weak professional hands and public go in, they start buying, and then composite is just not supporting those purchases by not participating anymore. And composite operator, big institutions can even start selling, to push the price down. Here, it's a different view because we already had a period of absorption of the supply, and this is just a confirmation. This is where I personally had to mentally switch from a possible move to the downside to the continuation of this up move. So this was a very telling bar. Okay, next question. SPY is going higher on lower volume. What does that suggest, if anything? Well, this is a very common question. The question here is, how is it that the volume in general goes down and yet the price goes up? So this type of price action is all function of the decrease in supply. It's only when supply is present, then we're changing direction, then we're changing the behavior. If supply is contracting, and it's not being presented by big institutions, and they are what I call control the supply of a stock or supply of the market, and it's not available, then the only possibility for us here is just to go up. And then even with the lower demand, the price will be pushed to the upside with the contracting supply. And that's why since 2009, this pattern has become so common. And I actually talked to quite a few, professional money managers that since 2009, 2010, 11, they couldn't really even recognize that as a contracting supply could be interpreted, you know, in a positive way when the price goes up, and a small demand can push the price up. So a lot of their trades were missed just based on the poor interpretation of volume. So very good question there. Okay, about scans for swing trader for trades up to 2 weeks. What's better, to look for weekly trading ranges and trade any reversal points on daily charts according to relative strength on daily, or to look for daily phases C and D in weekly uptrend? Dmitry, you can do actually both. So if this is the picture, let's say on the weekly, on the daily in this area, you might have a trading range by itself. You can go and identify on the daily, you know, that phase C and start, you know, trading that. You can trade it as a structural trade even without the relative strength first, because your structural interpretation, if it's correct, then you are expecting that on the daily it's going to go up, and then on the weekly it's going to go up. So your probabilities are lining up for you to be in that position and to open that trade. Right here, you might make a decision whether it was a sign of strength or whether it was an upthrust action, and the price might go down. In the stepping stone, it's a little bit easier, because usually you would go in on the swing trade into the trades that had some kind of prior leadership, and you want to observe the resumption of that leadership somewhere after phase C. And again, phase C could be just based on the structure. So you can do both. And I would actually suggest to explore more stepping stones, because those are high probability trades for us rather than the original accumulation range. Here, in a lot of cases, especially when the market is going up, you will not have any strength leadership signature. You will have just weakness, weakness, weakness throughout the whole range, and maybe on the sign of strength and backing up action, this is where you're going to finally see not the resumption, but establishment of that potential leadership. Okay, Ron, should we stop here?
We probably should. We've gone over an hour and a half.
Yeah, hour and a half, but that's kind of like regularly happens to me. Ron, it was such a pleasure. I thought that was a great session, and let's just think of what else we can do. For all of you there, you know, please let us know, you know, what kind of themes you want us to talk about. I want to explore HGSI features more. You know, Ron has mentioned specifically some of the things that he was working that were really excited, so that's coming up. So people are asking, you know, some of the information on anything that we do. So for HGSI software, go and sign up for the free trial. It's a 30 days free trial at highgrowthstock.com. Ron has a wonderful daily update that comes by email each morning, and I actually read that every day, just kind of like to quickly get into the sense of what the market is doing. Ron, how could people get that?
Well, if you sign up for the trial, you'll get it free for those 30 days.
Mm-hmm. Okay, so
but other than that, they would have to subscribe. But so sign up for the trial, and you'll get it for 30 days. And I break down the market every day with visuals and so on.
Okay, and then quite a few of you were asking about the classes. So Wyckoff classes I teach on wyckoffanalytics.com. This is the website. So come to the website, go under the classes, and here's the whole curriculum that we have. We have 3 main classes that are dealing with different aspects of the methodology and skill building. And then we also have some different special events like the workshops. So just check it out and email me, and I'll let you know what's available and how you can sign up for those. Guys, thank you so much. It was a pleasure. Ron, that was an awesome session.
Well, thank you, Roman. I really enjoyed it, and I learned a lot. So
Oh yeah,
we'll
me
have to do
too.
some more of these. Okay, great.
Yeah,
Well,
all
thank you.
right.
Thanks, everybody, for sticking around.
And the last note, yes, this session is recorded, and we're going to post it respectively on our websites. I'm going to post it on Wyckoff Method YouTube channel. So for those of you who would like to have the recording, just email me. I'll send you the link. Thank you, guys, and have a wonderful, wonderful week. Ron, thank you so
Thank you.
much.
Thank you, Roman.
Mhm.
Bye.
Bye-bye.